All right, awesome. So let's go through some fundamentals first. Before we jump into these articles, the very first one is about sanctions. So I'm not sure if everyone's aware of sanctions or kind of knows what they are for and things like that and their impact. So I'm just gonna go over them real quick. So sanctions are pretty much penalties that are imposed on another country, another company, or individuals from another country, and they can take a lot of different forms. So you guys may have recognized some of these from what's happening between the UK and the EU. So the first one are tariffs. So you could have sanctions in the form of tariffs, which are just taxes that are imposed on goods that are being imported, so that are being purchased from other countries and things like that. Another form is quotas, which is a limit that is set on the amount of goods that can be imported or exported from one country to another. The third one is embargoes. So those are trade restrictions that prevent a country from trading with another country. And then we have non-tariff barriers. So this is something that you guys might recognize between the UK and the EU, which are, and they're also called NFBs, which are restrictions imposed on imported goods, excluding taxes. So where we have tariffs, which are taxes, these are restrictions that do not include taxes, but they include things like special licensing or packaging requirements, any product standards, and things like that. So, and then the last one that we have are asset freeze or seizures. You don't really see that as much as the other ones, but these are pretty much where a country prevents assets from being sold or moved around that belong to individuals that are from another country, and as such. So that's really quick what sanctions are. And then the reasons for having those could be for retaliatory measures. For example, the ones that we're going to see here in this article. Um, it could be for deterrence to human rights abuse. So these are things that we have seen over and over again, and we have seen international organizations and institutions step in and try to place these sanctions as well on certain countries. And then also for nationalism. So that's another one that ties in my opinion, and ties in with the other two. The impact that sanctions tend to have are on both the country that is issuing a sanction and the country and the targeted country who the sanction is being imposed on. So for the sanctioned country, the impact on them is that their goods are not purchased abroad, specifically from the country that issued that sanction on them. So if the targeted country is, for example, reliant on exports and imports, something like Japan is reliant and things like that. So the sanctions may actually be crippling to their economy, right? It can have a huge impact on their economy. And then sanctions on the country that is issuing the sanctions. So these sanctions can actually increase the cost to their consumers and the cost of doing business in that country that issued them, because the sanctioned country cannot purchase the goods, right? So the country that they issued the sanctions on, they cannot purchase their goods. And so that's why the country that is issuing the sanction has a reduction of choice of goods and services. It ultimately endures a loss of employment, so higher unemployment rates, and then things like that. Pretty much they have like an economic hardship is what you would call them. So the reason for these sanctions and what they kind of show to the other country is that the country that is issuing the sanction on them is willing to go through the economic hardships in order to, I guess, quote, punish the other country, right? So a lot of the times, just the threat of I'm gonna place a sanction on you, kind of thing, actually is enough to have the other country backtrack a little bit and then kind of change its behavior. But sometimes we'll see that the countries that still don't really come to a middle ground, and then sometimes the sanctions are placed. Does anyone have any questions on that? That was just a quick little summary of what sanctions are and what they do. Everyone kind of understands what they are?
Yep.
All right, awesome. So you're going to see a lot of these, like a different form of them every time two countries have any sort of disagreement. So sometimes they just threat to do it, but sometimes they actually go through with it. So that goes right into our article here of US trying to impose sanctions on Russia. And it's not just over the election or solar winds. They actually mention about 4 different reasons down here. And out of the categories that I mentioned here of sanctions, it seems like this one, or the reasons actually, is that is retaliatory measures. So that's what the U.S. is taking here. So it's in retaliation for the misconduct, including the solar winds hack, which the United States thinks Russia did, and then also the efforts to disrupt the 2020 U.S. elections. So these are actually going to be announced on Thursday. So we have until Thursday, which is pretty much tomorrow. And New York session is when we can start to get some news about whether or not U.S. is going to actually going to issue the sanctions. So here it just says so far that they're planning on sanctioning. So this is more like a threat so far. And it's going to be, like we mentioned, it could be on another country, company, or individuals. So specifically, they are planning to place a sanction on individuals, including government intelligence officers, and also about 20 entities, that Russian entities here, and expel as many as 10 Russian officials. So what does that necessarily mean? Like we just went through the impact portion of the sanction, this basically means that the US is telling Russia that I'm willing to go through an economic hardship, of which includes like increased prices to consumers, increased costs of doing business, reduction of the supply and demand or the supply of goods and services, things like that, and even maybe employment gets a hit here because of this. So that's what the U.S. is basically telling Russia, that if you don't back off with the things that you're doing here, which they mention are the hacks and then also meddling with the elections, then we're going to place the sanction on you, right? And between the U.S. and the U.K., the U.S. purchases as of 2019, we don't have the 2020 data just yet, but as of 2019, U.S. was Russia's number 4 trading partner, and they had about $16.84 billion worth of goods that are being exported and imported between them, right? So that is a pretty significant number. I mean, if the U.S. was probably the 10th or something like that trading partner, it wouldn't really matter much. But still, number 4 could cause some significant hit to Russia's economy and the U.S. economy. So as we go further down, they're talking about announcements on Thursday, but also when they had the call between President Biden and then also the Russian president, the U.S. Biden pretty much said like, hey, let's have a summit between both of us and let's talk about these issues. So just this little announcement of the U.S. may place sanctions on Russia, just that brought in some market uncertainty, obviously, for investors for the given reasons, like I've already mentioned here, about increased cost to consumers and all that, right? We already know how if you increase costs for consumers, how does that ultimately affect businesses and all of that. So we know that, right? And from an investor perspective, it's obviously going to cause some market uncertainty and market fear. It's like, I don't know how the consumers are going to react to increased prices, especially given the pandemic, right? A lot of people, they're still not employed. A lot of people, they still don't have incomes. A lot of people are still dependent on stimulus checks and things like that, right? And so that is all, increased prices is pretty much the last things that the consumers need, especially in the United States and across different countries. So from an investor perspective, that brought in the uncertainty, but the idea of having a summit between two leaders is causing the investors to calm down a little bit. So the investors, just from that, the prospect of a meeting is causing the investors to calm down a little bit, that the summit could de-escalate the tensions and then mitigate the risk of new sanctions between the US and the UK. Does that make sense for everyone so far? Did I lose anyone?
Makes sense.
All right, awesome. Yeah, so as we go further down, they pretty much talk about just going more in detail with this, but that's pretty much the gist of what's going on. So they mentioned the 4 key areas concerning Russia: the interference in the elections, reports of Russian bounties on US soldiers in Afghanistan, and the SolarWinds attack and the poisoning of Russian opposition leader. So we also have news about Biden trying to pull out U.S. soldiers from Afghanistan in September 11th, so 20 years after like the 9/11 attack, which the U.S. That's when the U.S. soldiers, or that's when the volume of U.S. soldiers went in. So after that, so we already have, election sanctions, we have bounties, so you're already pulling out the soldiers, and this could be one of the reasons why that Biden's pulling out the soldiers as well to solar wind attack, and then I would say the alleged poisoning of Russian opposition. They don't really um, they haven't really released anything like pure data about that just yet. So that's what we have so far. And then as of tomorrow's Thursday, so that's when we're going to see, are they actually going to impose the sanctions, or are they just threatening? Are we ready to move on?
Yes.
All right, awesome. So this is more of the political news, not so much of economic. But as we know, the past couple of days, Greensill has been in the headlines, and the fact that uh, the UK is getting caught up in this little political lobbying here. So whenever the reason why I want to talk about this article here real quick is that whenever there's uh, fear, or the fact that citizens are starting to lose their confidence in their leader, there tends to be economic effects of that. And so here, what we're seeing in the very first sentence, that Boris Johnson is trying to ride out the lobbying scandal that is threatening to puncture the surge in popularity that he gained after UK's rapid vaccination program. So we're seeing that the citizens have this little wavering confidence in Boris Johnson, but that doesn't necessarily mean that the currency is weakening or anything like that. But these are one of the fundamentals that set up for further negative fundamentals, right? So this is one of the articles that you would keep on the back burner pretty much. And it's like, all right, so you have this, and then are there going to be other economic fundamentals or factors that are going to build upon this that are eventually going to cause investors to worry a bit about the leadership in the UK, and then also where's the currency headed at that point? Whenever there's economic turmoil, investors will always pull their money out, and they will look for safe haven currencies or commodities or some other place where they can safely park their money. So that's why I really want. I just wanted to touch on this article real quick. That over the next couple of days or so, until this Greensill scandal, sorry, Greensill scandal is out of the headlines, I think we're going to start to see a little bit of uncertainty just from a political perspective. And then we had Powell speaking today. So we had Powell speaking in New York session today, and he was talking about the US entering faster growth, even though that the virus spike remains a risk. And a lot of this growth is coming from the economy opening up again. And for that reason, we see that the Federal Reserve is first going to scale back on their bond purchases before they raise interest rates. So there's going to be a lot of things in between economic growth and the central bank, any central bank, not just the Federal Reserve, increasing interest rates. The increasing interest rates is usually what you see at the end. So before that, you have the government that's going to pull back any of the major assistance that it has already provided to their citizens, including bond purchases, for example, to inject money into the economy. Stimulus would be one if the government has been providing stimulus to its citizens a couple of times, and they're going to pull that back. So a lot of this assistance, minus the unemployment and like other benefits that people usually get, all the other assistance, the government's going to pull that back first, and then they're going to look at employment data. Is employment increasing? Specifically, in the last monetary policy, we had Powell talking about, he's specifically looking at Black employment. How's the Black employment in the United States, right? That's exactly how you put it. And then also, he's looking at inflation. How's inflation doing? So there's a lot of different measures that go into play, and then you have raise of interest rates. So we're not getting a raise of interest rates until all these other factors are fulfilled, and then until the central bank sees any growth in these other factors. Employment, inflation is being maintained or even reduced, and things like that. And then also pulling back any asset purchases. So as we saw in our previous breakdown that we had where it was the Federal Bank of St. Louis president talking about uh, us having to see 90 or 75% of the Americans vaccinated in order for the central bank to pull back, or in order for us to be considered an economic growth and the central bank to pull back any sort of assistance or bond purchasing. So from I guess from a healthcare perspective or an overall economy, global economy perspective, what we have is still this virus effects lingering, right? First, getting that into control, and then from that, you come into the financial aspect of the economy, which is, are we doing okay with inflation? Do we have employment increasing? Do we have people not being so reliant on government assistance, right? So that's what we have so far. And then it seems like the central bank is trying to push towards some positivity and optimism, but we still have this little uncertainty that they keep pushing in. Like, if we open up our economy, obviously the cases are going to increase. So that still remains a risk. We have still yet to vaccinate 75% of Americans. But on the other hand, we have the tools if inflation goes past 2%, or there's hyperinflation, tensions of hyperinflation, then we as a central bank have the tools in order to uh, maintain that, in order to fight against that. Make sense for everyone?
Yeah.
Awesome. Any questions before we move on?
No.
Okay. And then we have Johnson and Johnson talks. So last time we were looking at the charts, there were talks about Johnson and Johnson vaccine being paused. Johnson and Johnson vaccine being paused in the United States and some other parts of the world as well, while there were some blood clot. Oh my, all right. While there were some news about blood clots being associated with Johnson and Johnson vaccine. So we have this right now where they haven't really voted, and then you have a couple of different um, news here about Tokyo Olympics being canceled. That's an option here because Japan is still struggling with the surge in cases. And then we also, if you go further down, then European Union looking to issue a recommendation of Johnson & Johnson's vaccine starting next week. So we could see some boost in the euro and some optimism around the euro as more vaccines are getting approved and essentially being rolled out. So it's still, even if you do approve it, that brings in a certain amount of optimism. But the fact that you are actually rolling out successfully these vaccines is the most important thing. And then Russia is saying that there have not been any cases of clotting with its vaccine. So we have that pretty much with Johnson and Johnson. So still a little bit of uncertainty, but for the most part, governments approving the Johnson and Johnson vaccine, and then Tokyo trying to overcome its slow vaccination rollout so far, and then the fact that it just started this week. It just started its rollout in the elderly and its frontline healthcare workers. So the very first thing that I want to mention here before the other article is this is the fundamental that we're waiting for GBP, JPY, Euro, JPY, and a lot of the consolidation we're seeing in the market so far. From a fundamental perspective, this is what we're looking towards. So there's a lot of news about inflation, concerns about inflation in Japan, and we see that Bank of Japan, you have, first of all, you have one member. Let's see if I can. So you have a member here, right here, governor of the uh, Bank of Japan here. He's about to end his term in April 2023, but he says that he doesn't see the bank reaching the target of inflation before 2024. And then and then the person who's going to be taking his spot pretty much is, so far he has been um, all about the stimulus and also looking at ease of monetary policies. So he's not saying that increase any of the bond buying or anything like that, but he is saying that it's important to continue with monetary easing to achieve the price target, which is inflation target that they're looking at. So that's what we have so far. We have this little back and forth of where the governor of Bank of Japan is saying we don't need to do anything like that. But then also you have this new member who just joined Bank of Japan's board who is saying we need to continue ease of monetary policies. So we don't have to increase it right now, but this should be an option for us. And then you have IMF who is stepping in and who's trying to pretty much provide. IMF is the International Monetary Fund, for those of you who may not be aware. But they're trying to kind of come in and help Bank of Japan with some recommendations, telling them to shift your yield target to a shorter maturity in order to mitigate the side effects on the financial system. But we have again the governor who's stepping in from Bank of Japan saying we're not going to be doing that because we just made a huge adjustment to our monetary policies. And so as we go further down, that's pretty much where we see that the governor of Bank of Japan quickly ruled it out as an option after announcing the review in December, saying that there was little need to change the overall policy framework for the moment. So we're going to see what we're looking for pretty much from a fundamental perspective for JPY is Bank of Japan actually going to change any of their policy frameworks or make their maturity shorter, like they said, like IMF said here or suggested to shift their yield target to a shorter maturity. Any of that could affect the yen's strength. Any questions on the fundamentals? Any confusion?
Good.
All right, awesome. So let's just take a look at Forex Factory real quick. A lot of the data that we're getting here, for the most part, is pretty mixed. So we have a lot of the different areas here from Japan. Either it's maintained or we're getting a little bit of positive news. And then coming down to the U.S. federal budget on Monday, it has decreased here a little bit more. So actual lesson forecast is good for currency, but obviously we have higher than previous. And as we go further down, you have GBP, some retail sales monitor increasing to 20% from 9%. So that definitely caused a little bit of boost. But again, from a fundamental perspective, we're just looking for that BOJ news here. Yeah, so coming down pretty much, as you can see, we have mixed fundamentals. And then going into tomorrow, we don't have much from GBP. All you have is a credit condition survey, but I don't expect that to make much of a difference in the market. And then going into the New York session, you have core retail sales, and unemployment claims. So definitely watch out for this because this is the news that's going to cause the most volatility in the market. And then a ton of USD news going into New York until the end of New York. So definitely watch out for New York session tomorrow. And then after that, I think we're good to go for the final London session of the week. Now let's take a look at fundamentals, or sorry, technicals. And let's start off with GBPJPY. The very first thing, price came up this year and rejected this 152.300 mark. And I will make that red. So when we drop down to lower time frames, we know that this was an important level. From there, now it seems like we're breaking past this minor zone here as well, bringing in some more of the bearish pressure. So this was the 15700 area, which was a previous resistance in the past. So we're breaking below this entire zone of resistance from a yearly time frame, and it seems like we're continuing back down. So the next target from a position trade perspective, as we get more confirmations for sells from the monthly, weekly, and daily time frames, the next target for us is going to be all the way down here. So right into that support of this little break and retest where price again rejected this area as resistance but failed to continue below. And this is that 144.300 mark. So that's the next target on the yearly time frame. For position trades. And then if we fail to get some confirmations here below this 15700 area, which is a break and retest on the monthly, weekly, or daily time frames, then we can come right back into the zone. Again, some more consolidation until we get the news from Bank of Japan of what they're going to do with their yield. And then as it continues back up bullish, then the next target for us is going to be, well, the first target for us is going to be this 156,500 mark, which is the next yearly target for buys. So either way, we have pretty good range. We have about 420 pips for that wick fill, and then after that, coming up for this wick fill right here is about 1100 pips or so. And then as we continue down for sells, we have about 800 pips that can be taken advantage of as position trades. Coming down to the quarterly, super bearish. At the moment, we created a small top wick rejection and a small top wick. So it seems like we're coming back in order to test some of these resistance levels that were broken here, but not retested. So the first target being 148,300. And then let's drop down to the monthly so we can see this clearly. So here, what we have is price clearly rejecting this area as resistance, 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 and then support right here with these wicks. So clearly price tapping into this area over and over again, just to get the momentum to continue bullish, and then resistance here again, right? So this is our first target. And as you can see, even on the monthly time frame, we've been quite bullish from the start of 2021. We haven't had a single bearish month here. So all of this has yet to be corrected. So first target being the 148,300. And then after that, the next one is going to be 144,300. And as you can see to the left, there's a lot of consolidation, which tells us that there's a lot of liquidity trapped here. So what we're essentially looking for is price to continue down, wait for a break and retest right into this level, and then continue further down to 144,300. I think this is going to be a pretty good retracement in order for price to continue back bullish. And by that time, towards the latter half of the year, we're going to see GBP gaining some strength, because that is when all the businesses are going to be open up in the UK. And that's going to bring in some more consumer activity, which is going to spur up some more economic activity and growth. Any questions so far?
No.
All right. When we take a look at it from a weekly perspective, we have a top wick rejection. It seems like we're continuing back down, and I'm going to do a horizontal right here. So if we can break below the current wick that price is making, which is at 149,600 mark, if we can break below that, then our next target, nothing really stopping it at this point, regardless of whether price continues below this now or later on. But after we got that top wick rejection, that's further confirmation that there's nothing stopping price from continuing back down below 149,600, filling this wick for about another 100 pips or so, tapping into 148,300. So if you're looking for let's say a swing trade, you can definitely swing trade this for about 100 pips or so. And then after that, just let the rest of it run if you want for a position trade. So you can definitely turn your swing trade into a position trade, coming down to 144,300. So you're getting this confirmation to come all the way down for about 500 pips or so, until the next target on the yearly time frame. So you're getting this confirmation from the yearly time frame, from the quarterly, from the monthly, and now even on the weekly. On the daily time frame, it seems like we're trying to continue back down. Actually, let me go ahead and remove this so we don't get confused, because I want to use the zone right here. So you have a ton of consolidation right into this area. Once again, once you clear out 149,600 area, you're clearing out these bottom wick rejections, and then there's nothing stopping it from continuing back down. So this is where we're going to be looking for our entry. I personally have not taken a GJ trade this week at all, because this is what I'm waiting for. I'm waiting for price to continue down, break below these levels, and then continue down and try to turn that swing trade into a position trade. on the 4-hour time frame, we see the same exact consolidation, and we see a ton of fake outs as well. So yesterday in Asian session, we actually saw this fake out. Price came right back into consolidation in London session and even New York session. And right now, it seems like we're right into that consolidation support at the moment. If you just extend the zone over to the left, you can see that this is the same exact area that price keeps tapping into over and over again. And we also had consolidation right into this area previously as well. So once this is cleared out, you can start this off. Obviously, we're going to go down to like scalping as well. But if you're only trying to trade off the 4-hour time frame, you can start this off as a day trade, come down, and then actually look for your partials along the way. So like 40 pips or so, come down for about 80 pips and let the rest run for about 130. And at that point, you should be completely risk-free. And once this is broken, then you would look to fill your stop loss somewhere here and then just take partials along the way. Dropping down to the 2-hour, same exact thing. You have consolidation and 30-minute as well. So you have this entire zone or this range that you can trade for about 100 pips. But again, that's a massive consolidation that's happening on the daily time frame and even the 4-hour time frame. So if you're looking to turn your trade into a swing trade, I highly recommend just waiting for this 149,600 area to be broken and then look for your trade. But if your goal is to simply catch a couple of pips and scalp, then this range would be perfectly fine. You're just going to wait for some pullbacks and some confirmations along the way. Any questions on GJ? Pretty straightforward for everyone?
Yes.
Yeah.
All right, awesome. And then let's go into gold, and then we'll take a break and we'll come back in about an hour and a half and trade London. So looking at gold price once again coming back and tapping into some low levels. Let's do 1675 flat. So tapping into these areas, you have clearly some top wick rejections. So we'll just try to get an average of them, which is right into this area right about here. So that's pretty much it on the yearly time frame. What we have is a nice little bull run, a retracement, and with economic strong fundamentals, we're going to get a further drop back down, maybe a correction back down into these areas of 1500 for gold. But there's a lot of uncertainty that we're already seeing going into the second quarter of the year. So definitely, I do think price is going to push back up, and as we drop down to lower time frames, we're going to see some consolidations happening here on lower time frames. So I don't think we're going to be pushing below the 1675 area or 1600 area or 1600 area flat until next year. And that is given on how price has reacted previously around these areas when it made a resistance. Looking at the quarterly, same exact thing where we've had consolidation right into these areas. We even had one little fake out and then price came right back down. And this is when we started seeing some strong fundamentals coming out after the 2007-2008 financial crisis. So even now we're coming back up. We're pretty much doing the same exact thing where we're creating some resistance levels here up top. So up top, creating some resistance, comes back down, test right into the support area. And last quarter, we closed with a bottom wick rejection. This quarter, we're quite bullish. We've already created a top wick rejection here. So let's see if we can continue back bullish. And if we do, our first target is going to be this 1775 area. 1775, where also price has created the support before it finally broke back down. When we go on the monthly time frame, we see that that's exactly where price made its first low before it pulled back in order to create a lower high. And then as it came back down, it finally created a lower low on the monthly time frame. If we look to the left, we can expect price to do this pretty much this year as well, mimic that. And that's because of the uncertainty that we keep getting around risk currencies and also Bank of Japan, for example. Japan is a safe haven currency. We also have uncertainty around that. So due to the continued uncertainty around vaccines and also economies opening up, and from a political perspective, we're seeing a lot of scandals. So because of all of that, there's a ton of uncertainty, and we're going to see a a variation of this happening this year as well. So our first target, just based off the monthly time frame, is that 1775, 1800 area. And then after that, we're definitely coming back and we're going to be tapping right into this 1900 mark. As we drop down to the weekly time frame, we have the weekly resistance levels from the past still being respected, and the market actually collecting orders right below it. So this 1745 mark, that's exactly where the market is collecting orders at the moment. So I'll just use the same exact zone. But right about here, we see clearly that there's consolidation, right? We're still respecting lows here. And then now all we're waiting for is this 1745 to be broken and then continuation up until 1775 or even 1800. And at that point, you could turn this swing trade into a position trade until 1900. Daily time frame, same exact thing. We've made a fake out right here. Price still consolidating, respecting a support level. So we don't have any swing sells as of yet, or even swing buys until price breaks above 1745. And then swing sells would be pretty much below this area right here. We definitely want to wait until all of this consolidation is cleared out. So below about 1725 or 1720 flat is where we're looking for swing sells coming back into 1680 or 1675. Everyone good? Did I lose anyone? All right. I got a thumbs up. Cool. So on the 4 hour, same exact thing. Um, Usually when price is consolidating on daily time frames, I wouldn't really look for a trade. The entire goal here for me, at least, is to turn scalps into swing trades. So if on a daily time frame or 4 hour time frame I see consolidation, then I know that there's no opportunity or potential for me to turn any scalp into a swing trade. So I wait until these levels are broken and then I look for those trades. But if you're looking to scalp into gold, then you have, let me go ahead and remove this. You have the market consolidating right into this area, clearly a huge consolidation area. You have price breaking below. So even on the 30 or the 15-minute, you're going to wait for a break and retest and then a continuation back up. And you could target 1745 at that level. So if you're looking to scalp gold, you're going to wait until a pullback or some sort of break and retest and then price continuing up and take partials along the way. And then this could be another scaling opportunity or a partial level right at 1742 and then continuation up to 1745. In terms of entry and risk to reward and all of that, so let's say even if price pulls back and gives you a bearish close, let's say in the next 15 minutes, 30 minutes or so, you find your entry there. Wherever price makes a support, so let's say it pulls back down and makes a support here, you're going to keep your stop loss just a couple of pips below it because you still want to give price enough room to breathe and fluctuate as it needs to, and even create bottom wick rejections to grab that liquidity. And then as it continues bullish, then you have almost 3-to-1 risk to reward, and take your partials at 1-to-1. Any questions about any of the pairs that we went over or the fundamentals or anything like that?
No, that's good.
All right, awesome. So I will see you guys in about an hour and a half, and then we'll go ahead and get started with London session. And I'll send this recording right after we're done with the call here.
Okay.
All right, awesome. Thank you. Thank you. So I will see you guys in a bit. Take care.
Thank you.